Okay, so good morning, everybody. This is the Kushner Report at Fordham Road Collaborative. I hope you're all well. I'm Robert Brancatelli with the Fordham Road Collaborative, and this is Dennis Kushner, whom you know. I want to make sure that you get the calendar. We meet on the last Thursday of each month, so today's March 25th. The next one is April 29th, so we have a little bit of time for Dennis to collect more data for the April issue. A couple things. Some people have asked about the CPE, and it's came up before, so we are checking that out, and hopefully we'll be able to offer continuing professional education for some people in certain industries. We're looking at different associations, and maybe even the State Board of Accountancy. I think maybe there may be some connection there. So we will let you know. The other thing to note is that this is being recorded, and so if you're not interested in being recorded, you have access to your own individual controls where you can not show the video, or you can mute yourself. Next thing is that we will have Q&A. We're going to run from 8 to 9. That is, we're on the West Coast, so I'm talking about 8 o'clock to 9 o'clock. If you need to leave, of course, at 9 o'clock on the dot or before that, you can certainly do so. That's up to you. We're able to hang around for a little while afterward if you want to continue discussion with Q&A. And then you can also include Q&A in the chat, which is available to you. And again, well, let me go back. Those are our email addresses there if you need them. We're at FordhamRoadCollaborative.net. This is, again, the Kushner Report, and there's a bio about Dennis, a little bio. And again, we post these, the videos, edited versions of the videos on this site. So we try to cut out any distractions or not technical issues and glitches like that. So so you can find it there, Fordham Road Collaborative, FordhamRoad.net. And Dennis, I think that's it. Take it away. You're muted.
Okay, good morning, everyone, and welcome to the Kushner Report for March of 2021. As Robert indicated earlier, at the end of the program, we're going to have Q&A, and I hope everybody will participate. We can have an interactive discussion on the materials I'm going to present today. So what we're going to do today, the agenda is I'm going to talk about the key economic indicators, the global economy, the domestic economy, mergers and acquisitions, other significant economic news, and what's ahead in 2021. So this program today, I'm going to talk about the venture capital investment market that took place in 2020, followed by what's looking forward as we look at private equity going into 2021. First thing I want to address the gross domestic product, inflation, unemployment at the federal level, unemployment in California, and then the price per barrel of oil. So as we get started, if you look at the 2021 Global GDP Forecast, economists believe we're going to look at something around 5.5% for this year, which is going to be great. And then it'll curl down a little bit in 2022 to 4.2%. The US GDP is now pegged at 6.4%. It could go a little bit higher than that, depending on what takes place in the next 3 quarters. And then we'll drop down to about 4.8%. Inflation is starting to move up a little bit. We're looking at 2.4% this year, and maybe dropping down to about 2% the following year. The unemployment rate going out the end of this year will be around 4.7%. As you know, we were somewhere around 8 or 9% a few months ago. And then finally in 4.3% in 2022. California unemployment is still predicted at this point at 6.8%, dropping down to 5.1% as we move into 2022. The price per barrel of oil on the Texas Intermediate, the range is really somewhere around $57 to $70 a barrel. Let me preface it by the following. As you know, as the economies begin to open up, you have a tremendous appetite for oil by China, Japan, South Korea, Europe, and of course the United States, along with other countries. So those prices could go up higher than $70 a barrel. However, I think we've seen a contraction in production over the last 12 months throughout the world where production was cut down substantially. I would hope that we would see the production levels begin to increase as the economies improve. Otherwise, we're going to see a spike in gasoline prices. And I'll cover that when we talk about the price per barrel of oil. Now, what I'd like to do is take a little bit of a look at the global economy. I'm going to look at the Eurozone, India, and what's taking place with the 5-year plan in China. So first of all, in the European Common Market, the activity improved slightly in February, but really showed a continued contraction as COVID and social restrictions continue to go on. And you know, there's been some backfilling now where viruses are starting to increase again in certain countries in the European Common Market. And we'll see how that transpires over the next few months. India revealed lately that their inflation rate now is up around 5% over what it was a year ago. And core inflation has ticked up to 5.6%. The real outstanding issue here is that their oil prices are up around 35%, while food prices have also risen materially this year. So that's been an issue for India. In China, what's ahead in the 5-year plan? Well, China recently unveiled its strategic economic vision for the next 5 years in a lengthy plan that could help shape the direction of high-tech industries laden with venture capital-backed startups. So the plan calls for an increase in investment in a number of emerging sectors. For example, from cryptocurrencies to quantum computing. At the end of 2020, China governance funds raised about $873 billion. For the companies they're targeting in industries, the benefits can include cheaper loans, tax breaks, and legitimacy that comes from the state backing. Again, in this country, we don't take advantage of some of those issues. So we're kind of not playing in a level playing field here. Clean technology continues to be the primary focus in their new plan, which prioritizes innovation in electric vehicles and alternative energy. And as part of the goal of carbon neutrality by 2060, China wants to have 20% of its energy mix away from fossil fuels. So they're moving in the right direction. They expect to hit that within the next decade. If looking at the United States, the good news here, the fourth quarter of 2020, the GDP was revised upward now to 4.1%, which is very strong. And we've seen an influx of new government stimulus efforts and accelerated vaccine distribution could also lift growth in the current quarter. Now, keep in mind, by the end of next week, we'll have been through the first quarter, and I would hope to have some information when we get together in April about what transpired in the first quarter of 2021. The thing here, the revision, as I said earlier, we went through a negative 3.5% last year. That was the largest decline since 1946 after World War II. Now, the Senate recently narrowly passed a $1.9 trillion rescue plan, and those funds are being distributed as we speak. I believe we'll see another plan together for rescue plan later in the year, maybe sometime in May or June. So there may be some more money pumped into the economy. So now what I'd like to do is talk about capital investments from VC-backed firms last year. So first of all, we saw that companies in general raised $130 billion last year. What's interesting here is it's 14% higher than in 2019. $100 million funds occurred in 2020. We saw 318 rounds of that last year, which is very good. Now, the IPO activity in 2020 jumped. So we saw 147 US-based companies go public. Now, the M&A area, it was down in 653 in 2020, a little bit lower than we saw in 2019. We'll see a lot taking place this year. Keep in mind, a lot of companies that are small, that have venture capital, various investments over, let's say, from 1 to 4 to 5 to 10 different stages. A lot of companies do not want to go public. They want to be acquired and continue to move along. And that's what happens because they can't raise more money, or they feel it's really not a viable thing to go public. If you remember Sarbanes-Oxley, it's extremely costly to take a company public and stay and hope to be a viable business. On the global side of things, funding fell last year to 249 billion. So we saw a decline in that area of about 7%. What's interesting here is that you look at a lot of the activities taking place. So for example, in the United States alone, private equity firms last year had about $721 billion of unspent capital as of June 30th of last year. And that was because of the slowdown in business activity and deals where people want to get together face to face as opposed to Zoom, et cetera. So that a lot of the deals slow down substantially. So, but the PE firms today are anxious to put it to use. As you see, valuations will stabilize, and you'll see them start to grow as we get through further in the year. So I think competition for assets is going to be more competitive and will grow further as we move forward. What's interesting is in terms of distressed opportunities, we're talking about here that capital will come from different kinds of sources, and you'll see special situation groups that are starting to grow. And the private equity companies may be strong deals going over the next 6 months. We'll see a lot of activity. That's beginning to start now. And what's interesting is firms seeing the first-time private equity managers are going to recover in 2021. Many of these people that were early starters were phased out. They could not generate any funds at all, but those markets are going to start opening up as we go forward. Now, what's interesting here is the pharmacy market is going through a disruption and in the supply chain. So as you recall, a few months ago, Amazon came out and indicated that they're doing a startup, if you will, to get into e-pharmaceuticals. And that's going to be a huge business going forward. So what we're seeing now is that the way people will obtain their prescriptions is changing. So the industry traditionally has been a brick and mortar type of business, but it's slowly gravitating to online business. So you're seeing an ecosystem coming up with e-pharmacies. And that's going to be a huge growth area going forward by companies such as even CVS. Everybody's going to start moving to online drug distribution. So one of the concerns you have here is online fraud. Every time you start doing things on the internet, guess what? The bad guys are out there watching. So there's some real issues and concerns that have to be addressed and tackled as it relates to online fraud. In the central distribution hubs, you've got a lot of walk-in patients and services and aid for the uninsured or among the experiments in the fragmented e-pharmacy industry. So we're going to see what they're going to do to take advantage of that one particular channel of distribution that really, at this point, has no momentum. And as I said earlier, you're going to see pharmacy incumbents are likely to acquire a lot of startup companies. We're seeing that in San Diego as we speak. So there'll be a lot of M&A deals with companies that have drugs and various kinds of instruments. So now let's take a look at some of the other indicators that I'd like to address today. So in inflation, February, we saw inflation grow at 1.6% as prices increased due to gasoline of 6.4%. Over the last few weeks, if you've been at the gasoline station, you'll find that gas has gone up over 50 cents a gallon and it's continuing to rise. And I said earlier, that's going to be one of the things that will impact the economy down the road. I'm hoping that we'll see production levels begin to increase, not only in the United States, but in the Middle East and with Russia especially. So hopefully we'll see that begin to happen as we start moving to economic recovery throughout the world. And in the trade exports, we saw exports increase to 138 billion in January. That's below the December number, but that should take off as we go forward. The trade deficit still is running around, last month it's 68.2 billion in January, which is a little higher than the December number. We're still in the $60 billion range, which if you analyze that, we're talking somewhere between $700 and $800 billion deficit, which is not good. And that's got to be focused on as we move forward. Retail sales in February were down 3%, primarily due to weather conditions throughout the country. While January retail sales were revised upward to 7.6%. So January was a huge month. A lot of people were getting their checks from the government. There was a lot of built-in money where consumers are going back into the marketplace and buying. So that was very good. Now let's take a look at the employment picture. So here's what transpired in the United States last month. We saw payrolls in February increase by 379,000 jobs. They were looking at 200,000, so this really set the pace for much higher. Unemployment declined to 6.2% in February. Expectations are that we think that we'll see growth per quarter around 730 jobs plus per quarter. That's going to be in excess of somewhere between 2 and 2.5 million jobs as we move through the rest of the year. So that would be great if that continues. Just to take a look at a couple things, business and financial services grew again by 63,000 jobs. We've seen several months in a row now where that's continuing to show growth. Construction, usually for the first part of the year, was down a bit. It's down by 61,000 jobs. Again, that's because of weather primarily and some other issues in the supply chain. And of course, government cut about 86,000 jobs. The real thing you want to look at here is leisure and hospitality. As the economy's been beginning to open up throughout the United States, we're seeing the jobs going back. So we're seeing restaurants opening, bars opening. A lot of places are opening now, and these people are beginning to go back to work. So this is very good. That particular area was just gutted last year with massive layoffs in the millions. So hopefully we'll see that start coming back going forward. Now, here's the thing. There's a group called Beacon Economics. They're located in Los Angeles, and they're responsible for putting out the California Employment Report. And yesterday they indicated to me it wouldn't be available until tomorrow or Saturday. So what I'd like to do is look at January. That data wasn't open the last time wasn't available the last time we met. So payrolls in January down about 70,000. If you can look at the unemployment rate, we dropped down to 9% from 9.3%. So it's almost double what's happening out there on a national basis. And again, California last year lost 1.6 million jobs. I'm not going to spend any time on this. Just to look at in January, we lost some jobs in leisure, but the numbers were relatively flat, very modest to say the least. So let's take a look at inflation. As I mentioned earlier, was up. If we look at some of the other things now going forward, the Federal Reserve, for example, indicated that what they're looking at now is holding things relatively flat going forward over the next several months. I don't think we're going to see any change in the Federal Reserve doing anything. However, they've agreed to continue to buy Treasury securities and mortgage-backed securities on a monthly basis, so $40 billion and $80 billion. So that's going to continue to put money into the economy. When we look at the mortgage situation, if you've noticed, Henry, specifically for you, the cost of borrowing of a 30-year loan, fixed loan now, on aggregate across the country is up to 3.28% from 3.2% in February. So that's going to continue to increase as we go forward. So we'll see that's going to continue going forward. Now, the manufacturing index, the good news here, it was up a couple of points to 60.8. Now, if you go back a few months ago in 2020, it dropped into the 49 plus, which was bad because anytime you drop below 50, it says we're either going into a recession or we're in a recession. So we're very strong now in manufacturing. At 60.8 is excellent. So manufacturing is coming on pretty strong now, which is very good. So let's take a look at some other economic indicators. Factory orders have been critical to our economy. And in January, we saw that rise by 2.6%. We've seen that happen now for the last several months. The good news is durable orders were up by 3.4% last month, and it's continuing to grow. So this is really key on consumer purchasing and demand in the marketplace. Now, small business optimism rose slightly to 95.8. We've looked at this. The real baseline here is to be at 100. And where we are right now, it's the lowest average below 98. It's been that way for over 47 years. So hopefully later in the year, that'll go up above the 100. We were up as much as 105 before the pandemic. You look at consumer confidence, it was up to 91.3. Again, we're looking at a target of 100 threshold, so that will continue to go. As I mentioned, the oil prices earlier, so the oil prices dropped down about $4 a barrel since last Friday, and we're running around $60.61 a barrel. Keep in mind, that's like not less than $10 to get to $70 a barrel. So hopefully we'll see that change as we go forward as the economy improves. So the housing market, basically, overall sales were down 10.3% last month. That's the lowest level since August of last year. New home sales in general, across the United States overall, they were down by 14% last month. It plunged in February for various reasons. However, the good news is we saw strong sales in the state of California. So February's numbers rose to an all-time high at 15%. Now, taking a little bit look here, in Southern California was very strong. So Los Angeles County, the midpoint of a house was up 14.3%, up to $708,000, while sales were up by 19%. And in Orange County, which is really the key, we saw an increase in the median price to 9.6. It's the first time it's hit 800,000. It closed out at $820,000 midpoint. So that's very strong. And then, of course, San Diego County, the mid-range was 672,000 and was up 14%, and sales were up by 13.8. So I think we're going to continue to see things grow. Keep in mind, we still have a lot of low inventories across the board. And because of that, there's going to be a lot of competition for those products that are on the market as we speak. Now, productivity usually comes out on a quarterly basis. So I would hope we will have some information as we go into the latter part of April and how we did in the first quarter of this year. And I would hope it's going to pick up because people are going back to work and jobs are being created. So now what I'd like to do is take a look at the area of mergers and acquisitions. It was a booming month, and there's a lot of activity that took place I'm not going to report on. This is a really active month that we've seen over the last few weeks. So first of all, there's a company called Roku, which is in the Bay Area. They're acquiring Nielsen's advanced video advertising business. And the idea here is to offer fully addressable advertising solutions for TV programmers. And again, add more revenue in the channel. So we're going to see this going forward. No terms of the deal were announced, so we're not sure what that is, but we'll find out when the deal moves towards closure. Panasonic, the Japanese company, again, they'll be buying a US supply software firm called Blue Yonder for $6.5 billion. This is the largest deal they've done since 2011 as they continue to acquire companies. They're better known for consumer electronics and appliances, but Panasonic is broadening their horizons, and in recent years as they're focusing on building parts and supply services to other businesses such as batteries for Tesla. So they're really moving on, and they want to move more into the electronic cars business going forward. I mentioned Blue Yonder. They changed their name. They were formerly called JDA Software. They provide seamless, friction-free commerce, empowering every organization to move into fulfillment processes. So that's kind of where they are. I mentioned earlier about the biotech industry. It's booming, and you're going to see a tremendous amount of consolidation taking place. Amgen is buying Onyx Pharmaceuticals for $10.4 billion. That company basically is a global pharmaceutical company that is engaged in development and commercialization and innovative therapies for improving the lives of people with cancer. So they're really focusing on improving that side of their business. So you'll see more activity taking place by Amgen. If we move to the retail side, Nestle's North American water brands is for sale. They're going to spell that out for $4.3 billion. They're selling what they call Pure Life. And because it's been struggling in North America, so their brands are going to be sold. And what they want to do is focus on other areas, which would include Perrier. So at this point, they're going to keep Pellegrino, Aquapuna, and Perrier. And they're working with a couple of private equity firms to take over that part of the business. The tractor supply business in the agriculture area, we're seeing some activity taking place here. This is where Tractor Supply is going to do a deal for $297 million to buy its chief competitor. And what's going to happen here, they operate in 167 stores in 11 states in the Midwest. So this is a big deal taking place in that particular area. We've talked about the tire industry over the last several months. Goodyear announced they're acquiring Cooper Tire in an all-stock deal for $2.5 billion. This is going to be the two largest remaining American companies in the business are joining forces. And so what you've seen, this is the two oldest companies out of the Ohio marketplace manufacturing. Cooper, if you remember, was founded in 1914. So they're the fifth largest tire company in the United States. And what's happening, this will be able to expand to 2,500 retail locations throughout the country. Then there's a company, a private equity firm called Baypine. They're nearing a deal to buy Mavis Express Tire Services. This is a major company that's based back east. Its private equity is involved in the deal. It's worth $6.5 billion. They're basically based in New York, and they provide oil changes and mechanical services for more than 1,100 service outlets across 27 states. So this is a major acquisition on their part. Again, keep in mind, we're seeing more consolidations taking place. Now, GM-backed Cruise is buying a startup company called Voyage. Now, Cruise basically is a self-driving technology company that's owned by General Motors, and they've acquired this autonomous vehicle company for self-driving startups. This is going to operate in the service area for retirement communities specifically. No terms of the deal were announced. Now, if we look at M&T Banking in the financial services group is buying United Financial for $7.6 billion. And this is a Buffalo, New York-based company doing the deal. Now, if you wonder about People Financial, the company was started in 1842. So there's another example of a consolidation roll-up taking place in financial services. Basically, they have right now about 1,100 branches and over 2,000 ATMs across the country. Now, what I'd like to do is I'd like to talk a little bit about the significant economic things that are occurring in the country. China's name popped up again, as you see. So this is very important. So China is reportedly looking into curbing the export of rare earth minerals to the United States, which may become a new source of friction between the United States and China. Basically, we're seeing here that rare earths are about 17 metals that are required in the manufacturing of airplanes, computers, cell phones, electricity generation and transmission systems, and advanced components. This is going to have a major impact on our economy. What you don't know is that China basically controls 80% of the global supply of rare earth minerals and sees its dominance as leverage against the West. So stay tuned to see where this goes going forward. I'm sure you've heard that there's an issue now where a lot of the US car manufacturing companies are going to be closing down some of their supply chains and some of the work they're doing in production because they're lacking chips. This has already started. So we're going to see this roll out over the next several months. Tesla basically has put together a proposal to expand their facility in Fremont, California by 64,000 square feet. Now, if the city of Fremont decides not to take them up and allow them to expand the facility, the company has decided that Elon Musk has stated that they'll be moving all of production in Northern California, which consists of about 20 to 25,000 jobs, to the state of Texas. They've already bought land throughout Houston and other places. They've already moved their corporate offices. This will happen where they'll move out of California completely. They'll leave an office in the Bay Area, but they'll move everything out. So that's a major threat to the California economy. For those of you familiar with electronics from Silicon Valley, Fry's Electronics has been around for many, many years. And unfortunately, on the end of February, they announced that they were closing all 31 stores. The company has really struggled over the last several years because competing with a lot of the online companies. If you've gone into a Fry's, a lot of their inventories were basically from suppliers, and they were basically there. And when things didn't work out, they moved the product back. So Fry's was eliminating having to buy their own inventory. They've closed 31 stores, really primarily due to the COVID impact, and then the changes taking place in the retail industry. So they're another victim of what's taking place in retail. Lumber prices, this is a shock. Lumber prices have hit $1,000 per board foot, okay, for feet. It's an all-time high. This is double the price of almost a month ago. Now, this is going to have a major impact going forward to companies building new housing. Now, I was told by one of the companies last week that they expect the cost of building a new house with this new requirement on the wood area could raise the price to $24,000 per units going forward. So that's going to have an impact on sticker prices. And concern is how are we going to drive that down? It's to be seen where that stands. Now, AT&T, I mentioned last month in the M&A place, a lot of companies buy companies for the wrong reason. And AT&T did the same thing. So what they've decided to do, they're going to spin off DirecTV and Uverse. And they're working with TPG Capital to come up with a platform to move it out and for somebody else to buy the company. This involves 17 million consumers in the United States, and it's valued at $16.25 billion. Big deal, but they're spinning it off as we speak, and we'll see what happens in that area. For those of you who are familiar with the craft retailer Michaels, Michaels has been publicly traded for a number of years. They're working with Apollo Global. They're going to take the company private. The company basically has 1,200 stores throughout Northern California, North America, and they have 44,000 employees nationwide. Samsung, the Chinese, the South Korean company, is planning to invest $17 billion in a project to create 18,000 jobs in the United States. The primary target right now is, yes, it is, it's Texas. So they're looking to build that plant for electronics with cutting edge semiconductor technology. And that'll start sometime in the near future. For those of you familiar with Disney, Disney's had a lot of the traditional stores throughout the country. They've got about 300 stores. They're going to cut that by 20% and close those stores to move more products and services online throughout the country. So that's taking place again in the retail space. Now, this is interesting, and I've talked to Sid about this. According to the latest policy lab statement that came out of UC Berkeley, residents are continuing to leave the state of California since 2015. In the fourth quarter of 2020, we saw 267,000 people left the state of California, while we saw an increase of about 128,000 people. And this is going to continue. A lot of it depends on the cost of living, taxes, and everything else. So we're going to see this process continue over the next several months. For those of you that are familiar with Apple, Imac Pro is being discontinued. Soon it will no longer exist. And what they're doing now is, for the inventory that's available wherever it is in the marketplace, the items are priced at $5,000. This product came in and was introduced in 2017, but Apple's decided they'll no longer support the product and it'll be gone. Now, as you're familiar, we talked about GE in the past. They're in a deep situation here with turnaround efforts, trying to restructure the company and move in a different direction. So in addition to selling off all their appliances, what they're doing now, they've just signed a $30 billion deal with a company called AerCap, which is an Irish-based company, on aircraft leasing. And the idea here is to streamline the company and load more debt from the balance sheet. For those of you that had kids or grandkids, Toys R Us has been around for a long time. As you know, they went bankrupt, they closed, and they were fully liquidated at the end of 2017. There's another retailer coming back now that's going to reopen some of the Toys R Us stores in the United States, along with their other brands around the world. It's based upon, it's saying here that the toy demand is on fire for little people. So you're going to see Toys R Us stores opening up throughout the country, not the same level as we saw in the past, but we'll see them come back in the marketplace, which will be good. And then finally, for those of you that love and use Uber, they're going to reclassify 70,000 UK drivers and provide them with benefits. So United Technologies will reclassify 70,000 of its UK drivers as workers, entitling them to minimum wage, vacation pay, and other benefits after a landmark ruling in that country. And you're going to see that being rolled out in the European Common Market as well. And you know what happened here? They passed a law here, and they're going to back off on that with them. So this is interesting. Now you have a dilemma. They're going to treat them as 1099 people here, and they're going to be working with benefits. So we'll see what that impact is going to be going forward. So that's kind of where we are today. What I'd like to do now is open it up for Q&A. Good morning, Robert.
Good morning.
Okay,
You should be able to unmute yourself.
Yeah, you can unmute. So why don't we get started? Sid, any thoughts?
No thoughts.
Okay.
Dennis, I've got a question.
Okay.
The tanker that's jamming up the Suez Canal is probably going to take 2 to 3 weeks to be removed from where it's moored. The shipping backup is enormous. The economic catastrophe that it's that may take place because of it is going to cause increased prices, spoilage. Could be an inflationary thing. I'm curious to know what you think is going to happen as a result of people not being able to get supplied with food and gasoline and other things in that avenue.
Well, I think a couple of things. I think what they've estimated yesterday, this is going to cost about $1 billion a day. And the question is, I don't think they really have any idea how long it's going to take to remove that impediment, but it'll have an impact across the world. For things coming in, depending on where these cargo ships have to go. As far as food and everything else, the question comes up is how much of this stuff is spoilage? like agricultural goods versus just, regular supplies and things of that nature. So they're looking into all these things. They're going to have to look at what I would say contingency plans are going to have to put together right now to determine what ships are stuck basically in neutral and what products are on those ships, and decide what they can do in terms of contingency plans. For those of you, if your wives or your girlfriends like to sew, there's a company called Joann's. And what happened is during the pandemic, they basically, in some cases, triple the price of the fabrics because they couldn't get them into the United States because the ships were offshore and they couldn't unload them. So you're going to see some prices for certain things go up substantially. Now, for those of you who are listening this morning, there's a major problem in Brazil with coffee. And now they're talking about there may be a worldwide shortage forthcoming over the next few months in the coffee business. So there's an example of something happening in Brazil. I didn't get a chance to read all the details, but that was announced last night that could be a coffee problem around the world forthcoming. Morning, Robert.
Good morning. How are you today, Dennis?
Good. How are you?
I'm good.
My
With all
favorite
this
person.
inflationary talk, with prices of goods and services, shortages, dislocations, where do interest rates go?
I think the interest rates are going to start to creep up as we move through the year. I think the Federal Reserve said that they will accept inflation hovering around 3%, not the 2% that they've looked at
Wow.
for years.
That's
So
a
they're
big
talking-
difference.
It is a big difference, but I think what happens now is our economy is like a train. It can slow down, it can move up, but you know what happens when the train stops? You got a problem trying to get it started again. So you're going to see these things happening. If you go to the stores, the grocery stores, you're seeing the price of food going up right now. I saw yesterday like peaches are $1.79 a pound. I mean, it's unfortunate, but that's what's happening across the board here, especially like in San Diego. And so you're seeing prices going up. Gasoline is up 50 cents, between 50 and 60 cents a gallon.
Yeah. I paid $4.66 yesterday for gasoline.
Well, there's an Exxon not far from Costco. I almost had whiplash. For premium, it's $4.99 a gallon.
Oh my God.
$4.99
Oh
a
my
gallon for
God.
premium at Exxon down the street from Costco. So I'm saying it's taking place all over the place. You're going to see insurance rates go up from places like State Farm and Allstate. I mean, it's already starting to come back.
Yeah.
Based on that. Here's the problem with the gasoline situation is if you look at America in general, you have a need for discretionary income. And if you have to buy gasoline, then you're not going to be going to Disneyland or other places like that. It's going to be a redeployment of your money.
Yeah.
So that's a major problem. And then the people struggling to pay their rents and everything else, it's just going to be a problem going all along. So that's an issue that we're going to have to deal with going forward.
Are we
So
overpriced? Are we overpriced in the stock market in the S&P then?
I don't know. I mean, there's
I mean, I don't know either.
it's 50-50. I mean, depends on what you wake up in the morning. If I talked to Chris Caliendo yesterday, the answer is yes. If I talk to him tomorrow, maybe the answer is no. But the market is based on bottom line performance and valuations. And so, that's the real key. So that's kind of where we are. I mean, the governor of California indicated that they would like to have everybody vaccinated that should be vaccinated by the end of May, early June. Now, the kids going to school, they'll probably start getting vaccinations. Some of the high schools in LA are opening and they're going to try to, when they get more vaccine, they want to vaccinate everybody that needs to get a shot. So I mean, that's the good news, is to get this thing moving forward so we can see that. Now we're very close in Southern California is very close to going to, I think it's called orange, which is the next step, which means more things are going to be opening, more capacity and everything. So we're moving in the right direction and we're moving quicker than we were a few months ago. So this is good news across the board.
Thanks, Dennis.
Chris? You unmute yourself. You're muted, Chris.
No longer.
Okay.
Sorry about that. I just jumped off another call. But I was just curious where were you born, Robert?
I was born in Harlem.
Harlem, okay. Yeah.
I was born in Harlem, and then we moved to Brooklyn when I was 3, and I basically grew up in Bay Ridge, Brooklyn, and then Manhattan when I was 18, and left Manhattan in '77 to come out here.
Wow. I was born in Jackson Heights, Queens. My father was born in Brooklyn.
Nice.
My mother
Good
in
to see you.
Bologna. My mother in Bologna, Italy. But it's always welcome when I hear that great accent.
Bologna is beautiful. What a great place.
Well, my mother always said, "A tavola non si vecchio mai Cristoforo." At table, no one grows old.
It's old.
I
He's-
love it.
He's also a dangerous cook. So, Mr. Conklin, where are you, Bruce?
Oh,
By the
Bruce,
way, I think you're going to see more companies. If they can't get incremental capital, you're going to see more companies folded. You know, the comment is that in the restaurant business across the country, 40 to 60% of those restaurants will never come back. It's unfortunate. And we're seeing that all over San Diego.
terrible.
Now, I think what you'll see happening here is that you're going to see more entrepreneurs trying to get funding and moving forward, you know, with getting money from different sources. So there's a lot of money on the sidelines right now for different industries. And the question is which industries are going to move forward? I think biotech, high tech are going to be very, very strong. You see what's going on with China, especially talking about moving away from, from the traditional fossil fuels. So there's going to be more opportunities with alternative types of fuels. For example, it could be windmills, it could be, different kinds of technology, more solar. Los Angeles said I forgot what the date is, the LA County wants to be all green within X number of years. So, I mean, there's a lot of discussions going on, but it's planting the seeds. Bruce, any thoughts?
Well, I got a lot of thoughts, but I mean, this is the craziest. I remember someone told me to read Romans because Paul's sermon to Rome, and they all say that, and I've been becoming a student of the Bible, but the Bible does tell us in modern days what to do, and Paul had it right on with the Rome, and I feel like we are Rome.
Yep.
So history does repeat itself, and that's part of the problem. That's why there's no common sense. I am very concerned about the market because I'm a retiree essentially now. I'm in my 70s, and I believe that nothing makes sense. There's nothing. I think you can have a great plan. I'm in the turnaround business, so it's all about a great plan. We don't have a plan. It's just a bunch of stuff happening. There is no plan. And as a country, I feel like we're a ship without a rudder. And that's not just the president. It's everything that runs this country is just crazy. And so I don't know when that craziness ends. I was disappointed with this election because I've always been taught by my dad, my mom, and I always believed that there was a silent moral majority. It doesn't matter has nothing to do with who you vote for, what party you're with, but there's supposed to be this social moral majority. I have a feeling that's gone because I'm amazed at, for instance, women that think it's a good idea for their daughters to go to restrooms with men when they're 8 years old. I think it's awful. I think it's crazy that women would allow men to take scholarships after all the work they did to get Title 24. And I just find myself in a world right now that's so crazy. I don't know what to rely on anymore other than my own faith, my own belief. And so I think all this stuff about inflation and prices and stuff like that, I mean, I know exactly what happens with inflation. I went through it in the 70s, in the 80s. It's all about interest rates. That's the only way to control it. The absolute only way. So I think there's a lot of things that's affecting us. I mean, taxes, start increasing taxes. That's less spendable money. All these small businesses going out, there are people now without jobs. And the jobs they're going to get, we don't have a lot of $40 and $50 an hour jobs. That concerns me in this world. So, Janice, I have no idea what's going to happen, but I don't think it's great.
Well, one thing I wanted to bring up, somebody had asked a question before, they're not on the call, but they wanted to take a look at commercial real estate. in the country. And I think the commercial real estate market is going to really be under siege for the time being. The demand for new buildings and commercial real estate or existing buildings, you're seeing a lot of things taking place. I know that a lot of companies are trying to renegotiate their leases or their rents with the leasing companies because they don't have the demand for the space. I think at some point in time, people will be going back to offices. How many, what percentage? Hard to tell. Many years ago, when I was up in the Bay Area, Yahoo was taken over by a new CEO, and at that time, you had a lot of people that were working off site. And the concern was they were, instead of working, they were playing tennis or playing golf. So there was an issue with what they thought was productivity. And so at this point, how do you really measure productivity if everyone's working off site? I mean, forever. So we'll just have to wait and see. But there's a lot of buildings that are mothballed. You have to decide, what are you going to do with all these buildings? Now, companies, for example, like Target mentioned that what they're going to do is when they open up new stores, the stores are going to be substantially smaller than their existing stores that are around the country as we speak. Companies like Macy's are contemplating moving out of the mall areas, a standalone some other areas. So there's a lot of things going on in the retail marketplace, also in the commercial business marketplace, with what do we want to do with our space that we have right now? Because as you know, space and utilization is very expensive. If you're a company, it's very costly for utilization of space and office space, as well as production in factories. So we're going to see that whole thing being churned over the next 1 to 2, 3 years. We'll see what happens, how many buildings will be vacant and what they can do with those buildings. You know, Amazon can't get all the buildings. They can't take everybody's buildings that are sitting out there. You know, so you have to decide what happens. I remember Cisco unloaded like 10 buildings in the Bay Area. They were brand new buildings. They were never occupied by Cisco because they stopped expanding, and therefore the buildings were eventually sold off. They built them, they owned them, they sold them off. So we'll see what happens going forward. But back to what Bruce was saying earlier, there's concerns about, there's a lot of things going on now. A lot of people think that maybe our ship is rudderless and we're just kind of moving forward, trying to figure out, where we are right now. And there may be some value in that, but the real key right now is getting the economy back on track, getting jobs created, getting people back to work, getting stability in the marketplace. To me, that's really important. And I think that's what we're dealing with right now. You go back 5 months ago, it was really bleak, but there's a lot of positive optimism by people in general that things are happening in a good nature. So I'm optimistic we're going to move in the right direction, regardless of the political situation. That's critical. My concerns are right now, as I said earlier, about the alloys, the metals that China holds. I mean, they're really going to have leverage. And that's going to be a big bargaining chip going forward in the economy, without a doubt. It's already started.
Paul, were you had a comment?
Me?
Yeah.
Oh, yeah. On the big rate, on the big increase with the gas, would you attribute that to any of the Keystone pipeline closing, that anti-oil gas stuff, or is that not correct?
It's hard to tell what the impact of that is going to be yet. No one's talking about that. I know there's a lot of infighting going on to keep the pipeline moving forward. It's hard to tell what that means. If you think about the United States, we have the largest repository of oil reserves in the ground than anybody on the planet. So we can control our own destiny. Keep in mind, we still export 20% of our oil, and we import 20% of our oil. So, I mean, we're burgeoning on that. The other thing you're seeing now is a lot of people are moving towards buying electric cars. Now, the biggest concern I have is called the infrastructure. How do we accommodate all these new electric cars going forward with infrastructure? Now, there's a city in the Bay Area called Cupertino, which is not far from where we used to live in Los Gatos. They were having brownouts where streets went out because they had people, charging their cars, and they had all these electric things, their washing machines and dryers and computers. The streets were closing down. They were going dark because they don't have the infrastructure in place to accommodate everything. So the more and more vehicles we sell on the electric side, what is that going to do to our infrastructure around the country? That's a big issue. And that includes, putting stations up where people can charge their automobile and plug them in all over the place, whether it be the airport or all these different places. So there's some fundamental issues we're going to have to talk about going forward. It's not only repairing the roads and the highways, but we've got some serious infrastructure problems. Think about what happens when 5G really comes online in 2 to 3 or 4 years. Most of us will have to buy new phones because we won't be able to use our existing phones on 5G, without a doubt. And I can't tell you which phones are going to be. Is it an Apple 10, 11, 12, 15? Don't know, but those that have the older phones are going to have to replace them or you won't be able to use them. It's just like the old days when Microsoft came out with a new operating system. If your laptop or your computer didn't have capacity, guess what? You had to go buy new hardware. So, I mean, we're dealing with a lot of these things right now. And that's the real key. The other thing we're not talking about is every day I keep seeing things where your company has been hacked. By the way, this is happening here. I mean, the whole issue around cybersecurity is just, it's growing and it's going in the wrong direction. It's pretty scary that every company, everybody is being hacked around the clock. And that's another big concern I have about the safety and security of our assets.
So you think if Trump had been reelected, potentially I'd still be seeing $3.99 a gallon gas?
I don't know. I can't answer that. I don't know.
Okay.
I really don't know.
It's easy, you know, on my side of things to blame it on Biden, but I don't know if that's really the case.
Well, I
Short
think
term,
when,
short term, short term.
this is Bruce. I think when you get rid of redundant systems,
Yep.
we've spent 40 years fighting wars. Of course, the military complex makes a lot of money, all because of oil in the Mideast.
Yep.
Well, why wouldn't you want redundant systems in the United States? Why wouldn't you want redundant systems in Texas? Because apparently global warming didn't make it to Texas. So all I'm saying is when we cut off our nose to spite our face as a country, and we're absolutely held hostage by all other countries, and then we're surprised. So I don't know if it has anything to do with Biden or Trump or whatever else.
Yeah.
I think there's a thing called common sense. And the problem with common sense is apparently today, there is nothing common and there is no sense. So that's my 2 bits. And that's the whole problem right now is the United States does not have a plan, period, end of story.
Yeah, I agree. One of the things to keep in mind is the Russian economy, their economy is based on oil, okay? And they've struggled for a long time. When you cut production down, you cut it down. So maybe you get more money for higher prices, but the volume is lower, which in terms of generating the cash. So the Middle East and Russia and other people that produce oil have said that they were going to cut, and they cut production substantially. And that was okay when things were bad, but now we're running out of supplies and everything, and the prices are going to go up, and they're going to continue to go up. And so somehow they've got to turn on that spike. Now, Iran, for those of you who are familiar with Iran, said they're going to start increasing production, and they want to distribute more product into the marketplace. They've already said that. They're hurting financially. And the Russians haven't said anything at all, but if you look at Germany, most of Germany's oil comes from Russia. So they're paying through the nose. Look what's happening with India right now. 35% increase in the price of oil. And they've got a huge population. So what I'm saying, you're going to have to turn on the spigot. And what is it going to take and when does that happen? I don't know. I have no idea. But it's going to clearly affect the growth in our economy.
Dennis, one of the things that I recall having heard from the Biden administration is the next major proposal that they have on infrastructure is a $3 trillion proposal that would include massive building of charging stations for electric vehicles.
Mm-hmm.
And they're also opening up the world of solar farms and wind farms across the country, which will increase the number of jobs and increase the capacity for homes to be powered not by traditional electric, but by other means. I don't know how long it's going to take to happen, but at least it seems like that's moving in the right direction.
Yeah, I think that's a plan. And again, you mentioned $3 trillion. I mean, I don't know what our deficit is right now. Nobody really wants to tell you what the real number is. Is it 20 trillion, 50 trillion? You know, like Robert and I talked one day, all you do is write it off, forget it, and move on. I mean, theoretically, the problem you have right now is you need to look at where will wind technology work. Will it work in Idaho? You know, will it work in Alaska? I don't know, but you need to look at where they want to do these things and if it'll work. If you go to the Midwest, let's say you go to the Midwest and you're in Minneapolis or you're in Ohio and place like that and you have electric cars. Well, what happens when it's wintertime? Okay, what happens in the wintertime? I can't answer that, but here's another issue. What do you do with all the batteries from all these vehicles? Where do you put the batteries? Where are you going to dispose of all these things? I mean, there's a lot of concerns going on here. We talk about all the good things happening. Let me give you an example. I was in a meeting when I worked for Deloitte, and we were sitting in the back of this auditorium when Steve Jobs walked up on terms of the podium, walked up, and he took his phone and he held it up in the air. And you see this? We're going to the cloud. And everybody went crazy. But nobody thought about what is the impact of cybersecurity with going to the cloud and protecting your assets. All right. And they didn't even talk about that. So what I'm saying is you really need to look at the total package about what you want to do with charging stations and everything else. How do we accommodate that if we don't have infrastructure, right? And that's a problem. So I mean, how much money are we spending to put new towers in for cell phones and also to be able to accommodate all the electric? And that's a real concern. But they don't talk about that. They just talk at the high level of going forward, which is fine. But I want to see some of the details of what the plans are.
The other thing I see, speaking of cell towers and whatnot, I just switched my carrier alliance, moved from one carrier to another, and the process was about as difficult as anything I've encountered. There's absolutely no way to get to speak to a human who can get these things done. And strangely enough, I don't know how many people are aware of this, but the retail stores that exist for all the carriers are franchisees.
That's right.
They do not have the same policies as the companies that they represent. And you wind up paying a great deal more, and you wind up getting different plans, and they do not give you the same benefit of some special thing that's going on for the company if you go into a retail store. Now that's just another one of the major things that has to be solved. I think that we have a problem with getting things coordinated, and as was mentioned earlier, things become senseless.
Well, let me give you some insight. If any of you have Verizon as a carrier, when I moved down here with AT&T, it bad coverage. So when you need to get service at Verizon store, when you go to the store, you call the store, you want to ask them if they're a corporate store, okay, versus a franchisee. And if it's a franchisee, I don't do anything there. I want to go directly to Verizon's corporate store where they control my account and they do what they're doing rather than going to somebody. Because I went in one day and I asked them questions. Well, we don't do that. So what do you mean you're Verizon? Well, we're not a corporate store. So you have to decide when you go to a store, whoever it is it a corporate account store or is it a lease store where they sublease and they're on their own? So that's part of the problem, because a lot of things these leasing companies want to do with the other party, they can't do that because they don't have the wherewithal to do it on behalf of Verizon. And Verizon's not going to, I don't think they're going to distribute and allocate all those rights to third parties. Then you lose control of your business.
Yeah, I was on hold for 2.5 hours with Verizon yesterday to get to speak to a human.
Try calling AT&T.
Same thing?
Terrible.
Is that what you're saying?
Yeah, I kept on calling everything. It didn't matter. It took me like 2 hours to get a hold of somebody to be able to move from AT&T to Spectrum. That was a nightmare.
Dennis, I
And
just
just the
want
way it
to remind people we're after 9, so I'm just going to stop the recording so that when we post this, you're certainly welcome to stay and talk some more. But
say what's happening in 2021. I want to take a particular area. It could be biotech, it could be the oil industry, but that gives you a little bit something else to think about, just besides just financial, impacts for like factors and things of that nature. So I like to implement things along the lines. Like today, we talked a little bit about the venture capital marketplace. So I want to be able to give you some insight in some of the industries as what's taking place. So I'm glad you guys were on today. Appreciate everybody being involved, and I'll look forward to seeing everybody in April. If you have any questions, feel free to send me an email.
Thanks,
Thank
Dennis.
you
It
for
was
being on
really,
today,
really
guys.
terrific. Thank you for
Thank
your
you.
report.
You're welcome. Thanks for being on, everybody.
Thank you, Dennis.
Bye, everybody.
Thank you.
And Jeff, I'll see you a little later.
Yes, sir, you will.